Hi everyone, welcome to this quarterly update. I'm Sumaira Abdi and with me is our equity CIO Gaurav Mehta. So Gaurav, thanks very much. Gaurav, let's talk about the SBI Optimal Equity PMS because this is very much an active strategy. You have calls on both the long and short side. How have you used your short positions to mitigate the market downside? And how has the performance been, especially in drawdowns?
Right. So you're right, Mehta, this is a long-short strategy. The long side is usually comprised of long-term stocks that we want to own, and these are not, trading stocks. The short piece is where we express an asset allocation view through our asset allocation framework, and which is then expressed using Nifty derivatives. And I think overall, over the past few months, we've been running very conservative net allocations. So about 70% of the portfolio comprises of long stocks, but we've had about 20-25% shorts coming from Nifty derivatives, such that on a net basis, the allocation has been lower than 50%. And this is, owing to the fact that on our asset allocation framework, valuations have been slightly stretched, and most importantly, the market sentiment has been very stretched, both of which have led to us running lower than neutral equity allocations. And to the extent that we are running lower than equity allocations, and also the fact that even the bottom-up stock portfolio in this strategy is very focused on quality and low beta. So to that extent, I think overall this is a strategy which usually does very well in a falling market in terms of relative returns. And I don't think that the current fall is any different.
Okay, so but there has been some underperformance, right, relative to the Nifty 50, right? But you're saying that will get corrected. So for investors who have a 3-4 year time horizon, should they be worried at all? What do you want to say to them?
I mean, logically speaking, a long short strategy shouldn't have a long only benchmark, right? And which is why when you compare a long short strategy with Nifty as the index, then obviously in a rising market, such a strategy is bound to underperform, and conversely in a falling market, such a strategy is bound to outperform. That said, over the last 2.5 years since we have been running this strategy, it's been more or less a rising market. And in that market environment, the fact that we are somewhere in the vicinity of the Nifty with such a strong return on the Nifty itself, we think is a fair outcome. And you're right that over a cycle, as after this strong up move, as you see some corrections of turbulence, we expect this portfolio to fare that turbulence much better than what you would otherwise see in a long only benchmark like the Nifty. But I would want to reiterate that for investors, this is a portfolio where on a cross cyclical basis, which includes an up cycle and a down cycle, we are targeting Nifty or a little bit higher than Nifty kind of returns. But that also comes with the fact that when there are big drawdowns in the markets, we're trying to target half of the index's fall. And overall in this 2.5 period, while we have had very little short periods of drawdowns, but whatever those drawdowns have been, we've been able to curtail drawdowns to the extent of half of the index's drawdown. So this is a conservative strategy where we are still targeting Nifty-like returns, but with half of the index's risk in terms of the portfolio drawdowns. And I don't think there's any change on that front. So investors should, with that 3-4 year time frame, continue expecting that kind of a risk reward.
All right, Gaurav, thank you very much.
My pleasure.
On behalf of Gaurav, myself, and the entire team at SBI Mutual Fund, we wish you a very happy Diwali and a prosperous New Year.